Hello from Trend Signal for a review of the data and the events week beginning the 29th of January, the final few days of the first month of the year. Been quite an interesting move so far, with a move in the US dollar this month, and also US equities, wow, flying high again to new highs Friday, following fairly flat 3 days, Tuesday, Wednesday, Thursday. The reasons, less reasons to sell the market maybe. The GDP data, if we look at the calendar for last week, the GDP data that came out on Friday was actually a little bit disappointing, expecting a reading of around 3%. The very first reading, it's called the advanced ahead of what's called the prelim, curiously, 2.6%, but still reasonably positive. But a below par GDP reading, why would that cause equities to rally? It's a bit of a backward-looking number, probably tied to interest rate expectations. I guess there's less reason for the Fed to be overly hawkish with interest rates. Add that into the mix with the optimism that seems to abound about Q4 earnings and the upcoming results this week, which is a busy calendar of about 120 stocks reporting this week. So that's part of the reasons why I think most bears seem to have given up calling for a top. Probably makes the market slightly more dangerous as a measure of polarization, makes for a slightly healthier and less risky market. But we can't help where we are with that. But there we go. Let's have a look at the calendar for this week's releases. Just get on to this week. Nothing on Monday. It seems Monday is a forgotten day as far as data is concerned. Tuesday, we have the Conference Board reading of consumer confidence. As opposed to the GDP data that I just referenced, the consumer confidence number is an example of a forward-looking number, and it is followed quite closely. When I say a forward-looking number, it's almost sort of telling us what's going to happen in the future. If the consumer is confident about his or herself, and that means spending capacity remains good, which is good for retailers, good for the economy in general, and that number is expected to hit another multi-year high. We've also got Mark Carney speaking on Tuesday. He's testifying at the House of Lords Economic Affairs Committee. Obviously, sterling is particularly sensitive to anything Carney says, so that might be a point to be on notice. 3:30 on Tuesday. Wednesday, we have roughly the anniversary of Trump's first year in office. It's slightly more than that, with the delivery of the State of the Union address in Washington. Market will be particularly sensitive to any comments that might rekindle some of the protectionist ideas that I think seem to be put to one side, certainly last week when Trump attended Davos. But the market will be sensitive to any comments along those lines and any new initiatives that Trump may throw out there. So expect perhaps a little bit of flux on Wednesday. We also have the Eurozone-wide inflation data. Nothing too much to worry about, but I suspect Draghi's nerves will start to jangle on Wednesday. He's in a bit of a cleft stick, or the ECB is in a bit of a cleft stick, with particularly strong euro and the prospect of having to raise rates or start to shut down some of the extreme monetary measures that have propped up the Eurozone economy. So that's the Eurozone CPI. ADP data, this is the private payroll company. They have their own take on the non-farm payroll, which is this week being the first Friday of the new month. We're expecting 191,000. Steady as she goes, really, is my only comment on that. It would have to be a particularly dire number for it to upset the markets, and the market tends to look at a 3-month moving average, really, on that side. Crude oil inventories, another drawdown expected this week, 3:30 on Wednesday. Then we have the last FOMC meeting chaired by Janet Yellen, the outgoing chairperson, as she calls herself, of the Federal Reserve. This is the Federal Open Market Committee. They meet about 8 times a year. The next meeting will be in March. We're not expecting any change in interest rates this time around. We're likely to see or hear discussions about the March meeting and a potential rate rise then, which is basically what the market's factoring in. There's a 76% probability of a rate rise happening at the March meeting. On Thursday, we have the manufacturing PMIs from the UK and US, reading of obviously the manufacturing sector, anything above 50 points of expansion in that particular sector. So a 56.6 reading in the UK is quite positive. In the US, even more so, coming back from quite an extraordinary peak, the US manufacturing PMI, 59 expected this month, down from a reading of 59.7 last month, but still particularly strong. Friday, we have construction PMI here in the UK, actually still above 50, still expanding, nothing like as positive as the manufacturing sector, but that is also quite closely watched. And then the data for the week, the key announcement on employment or unemployment, the non-farm employment change, 184,000, surprisingly weak number the previous month, but again, the market tends to focus on the 3-month average, the all-important average hourly earnings for any sign of any future inflation, pegged at plus 0.3%. So if that is the case, not too many concerns there. And the unemployment rate, 4.1%, virtually at full employment. There has to be a level of some unemployment for people to be able to change jobs, of course. So very, very strong numbers. Other than that, we also have more Q4 earnings. As I mentioned at the beginning of this piece, 120 companies listed on the S&P 500 report this week. Some of the biggest tech names, the likes of Amazon, Apple, Alphabet, previously known as Google, Facebook, Microsoft. So the FANGs, some extraordinary data about these top tech companies producing revenue of more than 100 billion in the last 3 months, which is just extraordinary. Apple expected to break its quarterly record for net revenues as sales of the iPhone 8 and 10 boost revenues. Fortunately, not from myself. I won't be buying any more of those phones because they don't seem to be that much different from the older ones. Anyway, that's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.